Hello and welcome to FinanceWalk. After going through fundamental analysis, then financial statement analysis, ratio analysis, then valuation, the last part of this process is writing equity research report. As an analyst, you need to analyze and research the company industries first and go for this process next. Okay. This is very important to write equity research report in such a way that your clients will understand each and every word of your report, and it's very important to include most of the analysis in your report. The important pointers will cover in this chapter, that is how to write equity research report. We have separated this module in two parts. Part 1 and part 2. So we'll cover in this video we will cover equity research process, company fundamental analysis, company valuation analysis. Okay. So first is equity research process, that is company fundamental analysis. Okay, equity research process should be followed while researching any company. When conducting company analysis, analysts are expected to incorporate macro and economic analysis. First we'll start with company fundamental analysis. Okay. So in this step 1 is macroeconomic analysis. In macroeconomic analysis, what you need to check: interest rate forecast, market performance forecast, economic, political and related developments of interest to investment community. Okay. Consensus concerning effect of such developments on analyst view of financial markets, including a recommended percentage asset allocation among stocks, bonds and cash. Okay, so which we have covered in macroeconomic or economic analysis. This is fundamental analysis. We have in module fundamental analysis we have covered this. So you need to check that video and include that in equity research report. Okay. Step 2 is reviewing public information. What public information you have about a particular company. Okay, so annual reports, quarterly reports and conference calls are publicly available information. Okay. Step 3 is conversations with company management for detailed information. You see, you have public information, also many other people have public information, but you need to dig deeper and have conversation with company management for detailed information, right? So because you are an analyst, not every investor is an analyst, so this is your job to check each and every detail of company analysis, right? So conversations with company management for detailed information is an important step. What you should do in conversations, okay, so establishing a relationship with new companies is very important. Then most meetings with companies are done via phone, or you can do in person meetings also. So in these meetings you should obtain a better understanding of different trends, leverage and margins, different margins, operating profit margins, net profit margins, then efficiency of any company you need to check, then different cost or current cost and changes in this current cost you need to check of that particular company. Okay. After you do this, what you should do is prepare 5-year preliminary earnings model. Now what you should include in earnings model: EPS growth rate, then earnings forecast, okay, earnings prospects, earnings forecast, then balance sheet and cash flows, which we have covered in annual report or financial statement analysis. Also you can check forecasting analysis or forecasting technique module for this. Okay. Step 5 is reviewing financial assumptions. The assumptions which we have made while preparing earnings model or forecast, like with company as appropriate for company guidance, for example earnings comparisons. Okay. Next step is assessment. What assessment you should do? You need to assess management team. It's very important. We'll cover in detail what you should look at in management. Then competitive environment, suppliers, what are its suppliers, what are its buyers, then substitutes, barriers to entry, regulatory environment, and economic moat, which we have covered in Michael Porter's 5 forces model. If you look at fundamental analysis or company and industry analysis, so these all points you need to cover and write about in assessment area. Okay. Step 7 is finalize earnings model. Okay, so in earnings model you should determine earnings quality, then evaluate corporate governance, project company's core earnings based on the core earnings calculation criteria. What is that criteria? We'll see that in a while. Okay, it would be more accurate representation of the true performance of a company's ongoing operations. So these are 7 steps which are very important in any company's fundamental analysis. Okay, so let's look at core earnings calculation. What it should include and what it should exclude. So core earnings calculation should include employee stock option grant expense, then restructuring charges from ongoing operations. Okay. Then write downs of depreciable or amortizable operating assets, pension costs, purchased research and development expenses, any merger or acquisition related expenses, and unrealized gains or losses from hedging activities. So this should form a part of core earnings. Now let's look at core earnings, what it should exclude. It should exclude goodwill impairment charges, then gains and losses from asset sales, pension gains, litigation or insurance settlement and proceeds, and reversal of prior year changes and provisions operations. Okay. After fundamental analysis, let's move to company valuation analysis. So this is second part in equity research process. So let's see which steps this company valuation should have. Next step is an analyst must see multiple criteria for valuing a company, including intrinsic value analysis. What is intrinsic value analysis? Which we have covered. That is DCF analysis. Relative valuation. Okay, so relative valuation we have already covered in previous module. Then sum of the parts valuation and risk assessment. That is, analyst incorporates a risk premium to derive a valuation. So as an analyst you should use multiple criteria for valuing a company. So you should not focus on any one valuation, multiple. Alright. Next step is establishing intrinsic value. Okay, so target price over 12 months, and then analyst assigns a risk rating or risk ranking assessment. So you can give risk ranking assessment as high or medium or low of projected share volatility and the risk of capital loss. After these 9 steps, you should go for supervisory analyst review for regulatory and compliance purposes. Okay, and then the last step is you need to repeat some steps. That is second step, third step, fourth step 8 step and 9 step. So these steps are important. So these steps have to be done simultaneously, like continuous risk assessment, constant updates for covered companies from primary sources. Your goal should be to cover 7 to 8 updates per year and incorporate the same in your models. Quarterly updates published and distributed, material events, changes in recommendations, and stock report updates. So this is very important. Okay, I repeat, quarterly updates published and distributed, material events, changes in recommendations, and stock market updates. All right. So with this we complete company valuation analysis. In next video we'll cover the criteria or meaning of the terms that we used in this video.